What if I told you that one of the largest investment firms in the world, BlackRock, holds a staggering $9 trillion in assets under management? That's more than the GDP of many countries. Now imagine if you could tap into their expertise and invest like the pros. Whether you're a seasoned investor or just starting out, ETFs or exchange-traded funds are a game changer. Welcome to Satoshi Finance, where we break down complex finance topics to educate and empower you on your journey to financial freedom. In this video, we're diving into 5 of the top-performing BlackRock ETFs that are not just popular, but have been consistently delivering results. These funds span across different sectors, from the high-flying tech stocks of the S&P 500 to the rapidly growing markets in emerging economies. Did you know that the iShares Core S&P 500 ETF, IVV alone, holds over $300 billion in assets and has an expense ratio of just 0.03%? That's one of the lowest in the industry, and that's just the beginning. What about bonds, small-cap companies, and global market opportunities? These ETFs are designed to maximize returns while keeping costs low, giving you the chance to build a diverse and resilient portfolio. So if you're looking for a smart, efficient way to invest, stay tuned because we're about to explore the best of what BlackRock has to offer. Get ready to discover how these powerful ETFs can help take your investment game to the next level. The iShares Core S&P 500 ETF, IVV, is one of the most popular and cost-effective ways to invest in the largest companies in the U.S. stock market. This ETF tracks the S&P 500 index, which represents the 500 leading publicly traded companies in America, covering sectors like technology, healthcare, and finance. By investing in this ETF, you gain exposure to well-established names like Apple, Microsoft, Amazon, and Tesla, offering a strong foundation for long-term growth. One of the standout features of the IVV ETF is its expense ratio of just 0.03%, making it one of the most affordable ETFs in the market. This means that for every $10,000 invested, you only pay $3 in fees annually, allowing more of your money to work for you. The combination of its low cost and broad exposure to large cap stocks has made it a top choice for both beginner and seasoned investors looking for steady returns while minimizing management fees. The iShares MSCI Emerging Markets ETF, EEM, provides investors with exposure to a diverse range of large and mid-cap companies in some of the world's fastest-growing economies. Covering markets such as China, India, Brazil, and South Korea, this ETF offers access to industries across sectors like technology, finance, and manufacturing. By investing in EEM, you're tapping into economies that have the potential for rapid growth and higher returns compared to more developed markets. With an expense ratio of 0.68%, the EEM ETF comes with a higher cost compared to domestic-focused ETFs, but that's typical for funds providing access to emerging markets, where risks and rewards can be greater. This ETF is ideal for investors looking to diversify beyond the US and Europe, providing a foothold in economies that are positioned for significant expansion in the coming decades. While there's more volatility in these markets, the potential for long-term gains makes EEM an attractive option for those willing to embrace the risks. If you've made it this far, consider taking a moment to subscribe to our channel. Subscribing is absolutely free, and you can always change your mind. We have a wealth of financial insights and exciting discussions lined up for you. Your support not only helps us reach a broader audience, but also motivates us to continue creating high-quality content that educates and empowers viewers like you. So, hit that subscribe button, stay tuned, and join us on this journey towards financial empowerment. Thank you for being a part of our community. The iShares Core U.S. Aggregate Bond ETF, AGG, is a highly diversified bond fund that tracks the U.S. investment-grade bond market, offering exposure to a broad range of government, corporate, and mortgage-backed securities. This ETF is designed for investors seeking stability and income, as bonds generally provide more predictable returns compared to stocks. AGG includes bonds of varying maturities, offering a balanced portfolio that reduces the impact of interest rate fluctuations. It's often considered a cornerstone for conservative investors or those looking to balance risk in a stock-heavy portfolio. One of AGG's standout features is its expense ratio of 0.03%, making it an extremely cost-effective option for bond investors. This low fee ensures that investors keep more of their earnings, which is especially important in a low-yield environment. By investing in AGG, you gain access to a diversified basket of high-quality bonds at a minimal cost, making it an ideal choice for anyone looking to add fixed income to their investment strategy while keeping management fees at a minimum. The iShares Russell 2000 ETF, IWM, is a premier fund for investors looking to gain exposure to small-cap U.S. companies. The Russell 2000 index that this ETF tracks represents the smallest 2,000 companies in the Russell 3000 index, covering a broad range of sectors, from industrials to healthcare. Small-cap companies are typically in earlier stages of growth compared to large-cap stocks, offering the potential for higher returns as these companies expand. For investors with a long-term horizon and a higher risk tolerance, IWM provides an opportunity to capture the dynamism and growth potential of emerging U.S. businesses. The expense ratio of 0.19% is relatively low, especially for an ETF that tracks smaller companies, which tend to be more volatile and require greater research. While small caps can experience more pronounced fluctuations in value compared to large caps, they also tend to outperform during periods of economic expansion. For investors seeking to diversify their portfolio with growth-focused companies and are comfortable with the potential for short-term volatility, IWM is an effective tool for tapping into the potential of America's smaller, fast-growing firms. The iShares Core MSCI Total International Stock ETF IXIS offers investors broad exposure to international stocks, covering both developed and emerging markets outside the U.S. With IXIS, you can tap into thousands of companies across Europe, Asia, and other global markets, giving your portfolio a well-rounded international component. The ETF provides a diversified mix of large, mid, and small-cap companies, including well-known global giants in sectors like technology, healthcare, and finance. This makes IXIS a valuable tool for investors looking to diversify their portfolios beyond U.S. borders and capture growth from international markets. One of the key benefits of IXIS is its low expense ratio of just 0.07%, making it one of the most cost-effective ways to gain access to global equities. For every $10,000 invested, you're paying just $7 in annual fees, allowing you to keep more of your returns. This low cost, combined with its broad exposure, makes IXIS a great choice for long-term investors who want a global diversification strategy without the complexity or high fees often associated with international investing. It's a simple, efficient way to expand your portfolio and participate in the growth of economies worldwide. In conclusion, these top 5 BlackRock ETFs offer a diverse range of investment opportunities that cater to different financial goals, risk tolerances, and market exposures. Whether you're looking for steady, long-term growth with the iShares Core S&P 500 ETF, IV, tapping into the dynamic potential of emerging markets with the iShares MSCI Emerging Markets ETF, EEM, or seeking stability through the iShares Core U.S. Aggregate Bond ETF, AGG, BlackRock has created an ETF for nearly every type of investor. The iShares Russell 2000 ETF, IWM, provides access to small-cap U.S. companies with high growth potential, while the iShares Core MSCI Total International Stock ETF IXIS opens the door to developed markets outside of North America, offering a truly global diversification strategy. Each of these ETFs is designed to optimize returns while keeping costs low, with expense ratios ranging from as little as 0.03% to 0.68%, making them incredibly efficient investment vehicles. Whether you're looking to build a balanced portfolio, diversify globally, or invest in growth-driven sectors, these funds provide an easy and affordable way to do so. The beauty of ETFs is that they allow you to invest in entire markets or sectors with just one purchase, providing instant diversification and reducing the complexity of managing individual stocks. So, if you're looking to take your investment strategy to the next level and build a more resilient portfolio, these BlackRock ETFs are an excellent starting point. With the right mix, you can achieve both stability and growth, setting yourself up for long-term financial success. If you found this video helpful, don't forget to give it a thumbs up. Subscribe to our channel for more insightful content and hit that notification bell so you never miss an update. Thanks again for watching, and I'll catch you in the next video.